If you're new to investing, you've probably heard the term ETF thrown around everywhere, but what actually is an ETF and why do so many investors swear by them? I'm Zane, this is First Dollar Investor, and in this video I'll explain exactly how ETFs work, why they're one of the easiest ways to start investing, and how I use them in my own portfolio. When I first started investing, I had no clue what to buy. Everyone talked about diversifying, but I didn't even know what that meant. Once I found ETFs, everything clicked. It's like a one-click way to own hundreds of companies. Let's start simple. ETF stands for Exchange Traded Fund. It's basically a big basket of different investments that you can buy and sell just like a single stock. For example, if you buy an ETF that tracks the S&P 500, you're actually investing in 500 of the biggest companies in the US all at once. Instead of buying 500 separate stocks, you just buy one ETF and get exposure to all of them. Think of it like a ready-made portfolio in a single click. Here's why ETFs are so popular, especially for beginners. Number 1, diversification. You're spreading risk across many companies, not just one. Number 2, low fees. Most ETFs cost a fraction of what traditional funds or advisors would charge. Number 3, simplicity. You don't have to research dozens of stocks. The ETF does the work. You can sit back and relax. Number 4, instant ownership. They trade like normal shares, so you can buy or sell instantly. When I started investing, I used ETFs to build a diversified base while I learned more about individual stocks. It's honestly the easiest way to invest without overthinking every decision. Let's have a look at a real example. The S&P 500 ETF, ticker VUSA. Inside this one fund, you'll find companies like Apple, Microsoft, Amazon, and hundreds more. So when you invest in this ETF, you're automatically investing in all of these companies without having to buy them individually. A lot of beginners will ask, why not just buy stocks yourself? The problem is, picking stocks is difficult. You might get lucky once or twice, but it's risky and time consuming trying to research every single company. With an ETF you don't need to guess who will win, you'll own a little bit of everyone. Not all ETFs are the same. There's a few main types to know about. Index ETFs. They track a specific index like the S&P 500 or the FTSE 100. Sector ETFs focus on one area like tech or energy. Bond ETFs. They invest in government or corporate bonds for stability, low growth, less risk. And then you have commodity ETF that track things like gold or oil or silver. Most beginner investors stick with broad market index ETFs because they're simple, cheap and reliable long term. They have high growth and they are very steady. Buying an ETF is as easy as buying a single stock. In the UK you can use a stocks and shares ISA, like me, on platforms like Trading 212, Invest Engine or Vanguard. All you do, search for the ETF's ticker, for example VUSA for the S&P 500. Enter the amount you want to invest and hit buy. That's it. You now own a piece of hundreds of companies. ETFs make up a big part of my own portfolio. Right now it's just under 60% of my portfolio, which is about £3,163 currently. Mostly focused on broad markets such as an all-world and the Nasdaq 100. They give me instant diversification while I experiment with a few individual stocks on the side. It's a balance between learning and staying consistent. Before you start buying ETFs, avoid these common beginner mistakes. Number 1, chasing short-term returns. ETFs are designed for the long term. Number 2, over-diversifying. You don't need 20 different ETFs. 2 or 3 broad ones are plenty. Number 3, ignoring fees. Check the expense ratio. Anything under 0.2% is usually good. So, that's ETFs in under 5 minutes. What they are, why they're powerful, and how you can start using them today. If you're a young investor in the UK, ETFs are honestly probably the best place to begin. I'll be sharing more about how I grow my £3,000 portfolio and build toward financial freedom. So make sure you subscribe and follow along with First Dollar Investor. Thanks for watching, and I'll see you in the next one.